Hi, everybody. Welcome to Wealth Protector TV. I'm Paul Hitchcock, and this is our channel at our firm, Barth Calderon, where we give back. We're an asset protection, estate planning, business planning firm, and we just want to get high value content out to you that will help you in some way. Really excited for our guest today. I have Kaaren Hall, who is the CEO of
Uh,
uDirect IRA Services and self-directed IRA expert. Welcome, Kaaren.
Thank you, Paul. Appreciate it.
Yeah, and then I have my colleague James at Barth Calderon, who's one of our top attorneys, asset protection and estate planning. Welcome, James.
Thanks, Paul.
Yeah, and we're going to get into this. This is a great topic. And so, James, we'll start off with you on, our audience here with property owners, people using IRAs for different things. And James, what do we need to know with asset protection when it comes to property and specifically an IRA LLC and how that works?
Sure. So a lot of our clients like to have more control over their IRAs and what they invest in. And Karan can help talk about what uh, customizations or what additional things that they can do with a self-directed IRA. But when those things are put together, there are some certain asset protection vulnerabilities that come into play. And the use of an IRA LLC might be helpful. But I think it's a good idea to take a step back and let Karen talk a little bit about a self-directed IRA and how that might be helpful in general
Yeah, let's do
first.
that.
Yeah, yeah. I mean, self-directed IRAs are really amazing. I think that it's kind of the best kept secret in real estate investing and alternative asset investing because even though you've been able to get this to self-direct for 50 years, people just don't know about it. So, it started in 1974 when President Gerald Ford, that time, signed the ERISA Act into effect.
I know who
And
he
ever
is.
since,
Does that make me old? I know who he is.
yeah. Well, ever since then, you've been able to, invest in anything. So when IRAs were created, the IRS didn't say, okay, you can only invest in mutual funds or the stock market. It's just that those, the entities, that machine is so much bigger than the alternative asset machine. So people really didn't hear about the alternative asset possibility. So self-directing is something you've always been able to do where you can take these like alternative assets. I mean, it's real estate, right? But it's private equity, like syndications, and it's notes, which are a lot of times approved by the SEC, and you have to be sometimes accredited for those. And it can also be other things like cryptocurrency or metals, precious metals, different alternative assets, things that aren't correlated to the stock market. So this is where real estate comes in with a retirement account, and it's a great blend. Now, I mean, pros and cons because when your IRA is investing in real estate, you're not getting the same write-offs that we get personally when we invest with our personal cash, like our ready cash. When we're investing with our retirement account, the benefit that we get is that the money that comes back in is not diminished by tax. And so you can take that money, reinvest it in something else, and compound faster. But you're not going to take deductions for real estate that's in your IRA because the IRA doesn't pay tax, you see. So that's essentially how it works. But still, real estate in an IRA is great. Or you have your IRA lend someone money so they can buy real estate. Your IRA could be the lender.
Con, quick question. So, on the process of that, because it's not like people are contributing 2,500 bucks or 4 grand to an IRA and then investing in real estate. It's rollovers, or they're rolling over bigger, like 401ks to IRAs. Like, how is that getting done?
Yeah, most of the time it is. Most of the time it's somebody who's rolled over a previous employer's account. Could be a 401k, a 403b, 457. Yeah, usually it comes from a rollover when it's
Okay.
that big, or unless you're, Peter Thiel or something like that. Yes.
Yeah, he's putting tons in there. And has this niche of property owners investing in real estate, has it grown in recent years? I mean, has this become a bigger thing?
I think it was really big when I founded uDirect in 2009. That's when it was huge. When people could buy real estate, pennies on the dollar. You'd buy houses on a tape. There were so many houses to buy,
Yeah.
and people got them at just rock bottom prices. It was crazy, and our industry just expanded and blew up. And that's when people really, I think, learned about self-directed investing is during that time. Now, of course, now it's a different real estate market. Rates are higher if you're going to be borrowing money on real estate, and property is more scarce. You're dealing in a different market right now. But sure, different kinds of real estate. I mean, real estate isn't just like single family homes.
Yeah.
Maybe your IRA is investing in a syndication. Somebody's building like a multifamily building, and they've got a capital stack, and part of that stack is retirement money.
Hmm.
And so that's a lot of times and very, very common for a self-directed IRA to get involved in real estate like that at that level.
Interesting.
Yeah.
And that it's particular to self-directed IRAs, not 401ks.
Well, okay, so you can have a solo 401k that can be self-directed. But when you talk about like an ERISA plan that you may have at your company, typically those are not self-directed or not invested in alternative assets because the trustee of the plan, the employer, has so much responsibility for those assets that they usually don't allow or put in their plan document any verbiage allowing investments to be in alternative assets. So typically a 401k is not a place for alternative assets if it's with your employer. But if you're self-employed, you have no employees in any of the companies that you own, you can have a solo 401k, and
Okay.
that can be self-directed. Yeah.
And so what is your firm helping people do getting this done?
Yeah. Well, I think education is the number one thing, just making people aware that you can, because it's so much power. Um, the stock market where people mostly invest, where people mostly have their retirement assets in like, market correlated assets, mutual funds and things. You don't control those. And there's tons of market volatility. I don't have to tell you gentlemen about market volatility. And so a lot of times people prefer asset classes that they know and they understand. And a lot of times that's real estate because,
Yeah.
we all live in a dwelling, work in a dwelling, and we get brick and mortar. We understand buildings. And then a lot of people are real estate experts. If you bought a couple houses, you understand a lot more. So it just gives you freedom for more diversification.
And so if I wanted to set one up and I'm coming to your firm, I know there's some nuance to these things where there's some pitfalls. So you got to be careful and do this right. What are
Right.
those? Like, how does that work?
Yeah, the pitfalls are called prohibited transactions. And I I like to say the self-directed IRAs, it's like a whole game of keep away, keep away from prohibited transactions. Because if you avoid those, then you win. You win the game. So prohibited transactions involve first off involve disallowed parties like ascendants and descendants and being asset protection attorneys. I know you understand this so well, but say you were to pass away, who would be and you didn't have a will or a trust, who would be the first people to get your estate? It would be your ascendants and descendants, right? So those people are disallowed to your IRA, plus a 50-50 business partner or any fiduciary in the deal, like your realtor maybe in the deal, a fiduciary. So they're disallowed. So the prohibited transactions evolve around these disallowed people. So your IRA doesn't buy an asset you already own because you're disallowed to your IRA. Your
Mm.
IRA doesn't sell an asset to someone who's disallowed. Your IRA, for example, wouldn't make a loan to your kids to go to college because they're, up and down the family tree, they're disallowed. So a lot of the rules are to keep away from disallowed people. Now, the people that are allowed might be, your brothers and sisters, your nieces and nephews, your cousins, all that out to the side on the family tree. They're okay. And your neighbors and that. But keeping away from prohibited transactions and disallowed people is essentially it. And as the IRA owner, you can't provide services to the plan. If you're calling the shots and making especially if you're receiving personal benefit, like getting a paycheck, say you're a GP on a syndication, your IRA money is not involved in that deal. It will be a prohibited transaction because you are offering services to the plan. Now, where's that written? I know you guys love chapter and verse. So it's the IRC, Internal Revenue Code 4975. So IRC 4975 has all those rules, and you can read them about what is prohibited and learn more about the nuances.
And yeah, and so you're walking people through that when you're
Right.
you're helping them. And then do
Yeah.
you custody the assets at your firm when people are doing this?
Right. We work, in tangent, in combination with a trust company custodian. So that yes, the assets are custodied. And it's the same with any other asset. If your IRA over at TD Ameritrade has stocks, they are custodied as well
Okay.
by a custodian. So that is how it works. Yeah.
Okay. Well, James, I want to touch on something here because as we talk about people uh, owning real estate through their IRA, there's some misconceptions out there about the protections they have with liability. And they're buying property, as a firm, we're speaking to
Right.
property associations all the time, and there's just a lot of liability, tenant liability, all that stuff. What is the misconception? And then what is this IRA LLC kind of about?
Sure. So let's start with the general rule of thumb where if you're going to have any rental property, whether it's in your own name, in an IRA or self-directed IRA, you always want them inside of an LLC of some sort. Just a general rule of thumb. And especially if you're going to have other assets besides just one specific real property inside of a self-directed IRA, you want that encapsulated inside of an LLC by itself. That way, any liabilities can be contained at that one property or that one, not property, but the one LLC. And it doesn't spread out to the other assets that the self-directed IRA might have. There's also another big reason that we use self-directed IRAs, self-directed IRA LLCs, and that's for asset protection purposes. So not every state protects their retirement plans. Certain states like California, Georgia, Alabama, those states have limited protections on retirement plans that are not considered ERISA qualified. And what I mean by that is an ERISA qualified plan is a retirement plan that has another employee participating in that retirement plan that is not the spouse or kid or ascendant or descendant, as Kaaren mentioned. And so if a plan is not protected under that federal ERISA qualified plan, then it's potentially at risk of being grabbed by a creditor. If
Okay.
the person who owns that plan gets into legal jeopardy or it gets into a liability.
So if you own a property in your self-directed IRA, it's just like owning it in your own name. They can just break down through the IRA into you as the owner of the property and be a
Yeah,
liability.
depending on the type of plan that you have, let's say it's not an ERISA qualified plan. If I owned that self-directed IRA and it only contained bank accounts or real estate not inside of a IRA LLC,
Yeah.
then they would be able to just take that away. And even if it was a standard IRA, not a self-directed IRA, then they would be able to take that away as well.
Yeah, and then when you're setting up the IRA LLC, with an IRA versus owning property outside of an IRA or an LLC for a business, is there a difference between the IRA LLC and some of the nuance that goes into the operating agreement and those things?
Oh, absolutely.
All right.
So in a self-directed IRA, we want that IRA, a self-directed IRA, to create the IRA LLC. You can't use any of the money from the client themselves to create it.
Oh, okay.
And they have to then hold the assets inside of that. Yes, all the operating agreements are specifically tailored to an IRA LLC, and there are certain rule sets that you have to follow that Kaaren mentioned a bit.
Yeah, because that's an important point because people think maybe they just go out and bang out an LLC on the internet to hold their IRA LLC, and it's not going to work when it needs to work,
No,
there's
I would
liability.
not recommend doing that. Absolutely not.
Yeah.
Well, it's a prohibited transaction, isn't it? Because your IRA can't buy an asset you own. And if you created that LLC, your IRA couldn't buy it because you're the owner. So not only is it a bad idea, but it's a prohibited transaction too.
Well, that's an interesting point. And so, what happens there, Kaaren? Are these things audited? I mean, how does somebody get busted if they're doing prohibited transactions? Will they get nailed at some point?
Y- Not always, but yeah, you pretty much have to be audited. Of course, now what happens when you commit a prohibited transaction? I think that's important. It's like your IRA is this tax protected bubble. And when there's a prohibited transaction, that tax protection, that bubble bursts.
Yeah.
And now all the assets in the IRA are subject to taxation, penalties, and different, things like that. So you don't, that's when your IRS says, yes, this is a prohibited transaction, that's what happens. Now, that doesn't happen very often. I've been in the industry 17, 18 years, and I've only seen it happen a handful of times, like where the IRA was completely destroyed. So, but I really think that the IRS, they have more auditors now, don't they? And a
Oh,
few
yeah.
years ago, they caught wind of alternative assets and changed the 5498 and the 1099. Those are the documents that we use to report to the IRS what's in, and we have to tell them what's in the account.
Oh,
So
okay.
now there's a code on those documents that says what asset does the IRA hold? And we didn't used to do that before, but I don't
Hmm.
know, it's been a number of years now that we've had to suddenly, start just telling the IRS what the asset is. They weren't even aware that you could self-direct an IRA. I was audited once and the auditor didn't even know what it was. So that's how best kept secret this thing is.
Very interesting. And
Yeah.
Kaaren, when you start getting into the admin of these things, like people have inherited IRAs, right? Or some are stretching their
Yeah.
IRAs and doing all these things. And then
Not
there's
anymore. Yeah.
not anymore. And then there's mandatory distributions require, RMDs and stuff. Are you all
Yes.
over that and reporting that and on top of that?
Yeah, I mean, those are reported. Yes, we do that kind of reporting for the account holder, that tax reporting and the record keeping for the account. We do that, yeah. But when it comes to taking your RMD, you have to personally be aware of it. We'll send you out some general reminders, but it's the account holder's responsibility to take that money. Now, the nice thing is the RMD age after Secure Act 1.0 and 2.0 has kind of gone from 70 and a half to 72, and now it's 73. And in 2033 it's going to be, or 2030, yeah, 33 I think it is, it's going to be um $10,000 more. So, or actually, yeah, it'll be anyway. So that's how that works. So that's or 75 will be the age. Yeah, in 2033 75 will be the age. So the government is realizing we live longer, but whether or not you take a required minimum distribution is dependent on, it's between you and the IRS.
Right, right, right. How do you take an RMD if you own property?
You withdraw cash from the account. Now, if you have a property in an IRA, and I know James would agree with me, you need to have a float or like a little pocket there of idle cash, like a reserve of idle cash.
Yeah.
And you'll get that from rents, you'll receive that from rental income typically.
Okay.
And you need that money, usually 10% is a good rule of thumb, to have 10% of the value of the property in idle cash for things like repairs, because you can't pay for those repairs out of your own pocket. Those repairs to an IRA owned property have to be paid for by the IRA. Similarly, anyway, that's how
Yeah.
it works. Yeah.
Yeah. Yeah. Well, my takeaway on this is sort of a 1-2 punch is that if you're looking into doing this, that you for sure, Kaaren, have to make sure they get with you and do it right. But you've also got to get the asset protection there and the IRA LLC. And if you're missing one or the other, it's going to sort of a bubblegum and toothpicks.
Yeah, yeah,
Very,
James can really, flesh this out, but it's not free.
right.
So
Right.
you need to, but the IRA will pay the expenses, but it's an investment. Don't you think, James?
Yep, that's absolutely true. Yeah.
Yeah, it's funny because property owners, it is a business. You're running a business, and a lot of times they don't think that way, right? Uh, they like somebody selling widgets or something. They know, okay, I've got to have asset protection. I got to have a legal structure. I've got to, do my corporate minutes and all the admin correctly. A lot of times that goes by the wayside with rental property. It's just a different sort of mindset. We see at the firm quite a bit, so it's a good reminder. It's a business, got to do it right.
Mhm.
Yeah. Well, it's great. I want to tell everyone listening to this because we're streaming this everywhere, YouTube, LinkedIn, it's all over, that The contact information for Kaaren will be around this video, as well as James and our firm. And Kaaren, do you have, if someone wants to learn more about this, what do they do on your end? So they go to your website? Do they call up? And what happens?
Yeah, the best thing is to shoot us an email, info at, uDirectIRA.com right over here. So info at, or yeah, that's the best way. Just hit us up, or the email, I should say the web address. The website address is uDirectIRA.com.
Yeah, and we'll make sure we have that all around the video. And James, we know we're going to have people, if they want to talk to you, get a consult on asset
Yep.
protection, IRA LLC, happy to do it. Well, thank you both for being here. This is great. Really appreciate it.
Thank you.
Thank you, Paul.
Okay, we'll see you soon.